What's up, Mortgage Coach community? Dave Savage sitting down with Grover Greer out of Arvada, Colorado, which is a suburb of Denver, for those of you who don't know it, with Legacy Mutual. What's up, Grover?
How's it going, man? Thanks for having me.
Yeah, no, thanks for making time to do this. Actually, why don't you stop sharing your screen just so we can see a full picture of you, and we'll pull up that screen when we get to it. Anyways, guys, Grover, how long have you been using Mortgage Coach?
I mean, we had a rocky start, but I mean, we really hit our stride, luckily, earlier this year, I would say. Maybe late last year. I'm trying to remember. It's a little over a year. We tried before, and then once we really figured it out, we hit the ground running hard.
Well, all I know is we're rolling out with your company, Legacy Mutual, and we were looking like, who are some of our big users here? And you got on my radar because, one, you're killing it. You're doing a lot of business. You've done 50 total cost analysis in the last 30 days. So you've clearly figured out how to do it. What was your Mortgage Coach story? Why did you start using Mortgage Coach?
You know, I just always heard about it and thought it was kind of a cool tool, but like never really like dug in on how it actually works. But I guess my story would be, once I figured out how it worked, I mean, we were doing, you know, 3 scenarios on a sheet of paper for people, you know what I mean, side by side. And once I saw this, I was like, wait, this is next level stuff, man. Like, this is actually being a consultant and showing people the difference in all these different options. So, you know, that was kind of when it was like, I got with Candace, who runs my team, and we had a talk, and I was like, we got to dig in on this thing. I just think it's going to be a game changer for our clients and our business.
So you really did it because you thought it would be more valuable to your clients, and it would elevate the service that you're delivering.
I think that go ahead.
No, you go ahead.
I think it takes you from being an order taker to actually, you know, consulting people even deeper, which is something that we've really focused on as a team over the last year and a half, that we don't want to be a Quicken or somebody where you're calling and I just stamp a rate on you. I want to give you options and show you those options side by side so that we're talking about what makes sense for you.
Love that. What about from a time savings perspective? When you looked at it, was it purely better value, better service, and conversion? You thought it would improve your sales conversion. Did you also think it would save you time?
I didn't know if it would, and I think that was the biggest fear in starting it, is that you worry it's going to be all this data input and stuff like that. But then once we realize that, then it's a home run, right? Because it's taking all of that, and it really it speeds up everything from getting a quote out to, you know, the clients really can dig in on it and take a look at it. And then if I want to open it up with them, you know what I mean, when we're locking, I can interactively play and show them. And it's like boom, boom, bam. Instead of a client taking 4 or 5 days to lock, we can go right through it. I can walk them through all the costs, all the everything, because everything's built in there. So it's been huge from that perspective too. I don't know how we get through the times that we're in without it.
Yeah, no, I hear that all the time. Most people who start using Mortgage Coach, it's you know, obviously more value to the client. They think it's going to improve their conversion, but the fact that it saves time is always the hidden benefit. Well, why don't you tell everybody a little bit about your mortgage practice, and then let's get into strategies around how you're killing it in today's market.
Cool, man. Well, Legacy Mutual as a whole, I mean, we like to think we're like the Navy SEALs of lending. You know what I mean? We're elite. There's 50 something of us, but we're closing, you know, billions of dollars in loans and stuff like that. As far as my team, I got a team of 5. They work really hard, and then we're just we're seeing record numbers this year. And what I'm proud of is it's not just the refis. We're seeing record numbers of purchases as well. So we're really killing it this year. I'm feeling good, and it's the same with the entire company. I'm proud of Legacy and the ops and everything like that. You know, everyone's just crushing it and hitting it at full stride. It's like we were born for this. So it's been a lot of fun.
Congrats. What kind of production are you doing last month or this month? Just give us a feel for the type of number of families you're serving.
Yeah, I mean, we got like 39 loans going for about 12.5 million this month. Next month, we're already over 22 million, which our purchase wave hasn't even hit yet. You know, last year, I think we hit just at 50 million to like 46 or 48, I would say. We're already over 62 for the year, and then we'll add this month in. So we're just you know, we're growing every year, and when we came to Legacy 4 years ago, we were at 18 million. So that's the growth we've had over those last 4 years.
Wow. Congratulations. That's incredible volume.
Thanks.
And it sounds like you have a team and a platform that's doing sounds like you've done over 200 loans for the year already. So I don't know if you think you'll hit you think you get to 300 for the year?
Well, we'll see. I wouldn't have said so, but I mean, when you start seeing the 30s and 40s pop up, I mean, we have a chance to hit 40 loans in September, in October, the way it's trucking.
Right.
I mean, I'm trying to, yeah. So, I mean, you try and cut it off to keep the team happy, but sometimes we just can't. There's just, stuff we have to take. So, never say never, I guess I would say.
Well, I know you told me you watched a lot of Jeremy Forcier's interviews with me. Did you see the one I did last week where he's already done over 400 loans for the year?
Jeez.
Did you see that interview?
I haven't seen that.
Or was it over 300? No, I think it was 400. He said he thinks he's going to do 250.
I mean, either way, that's the thing about the cores. You feel good until you start seeing their numbers, and then you're like, wait a second, you know what I mean? So no, I'll go back and watch that one for sure.
Well, he's got a few TCAs on you. He's been using Mortgage Coach for, I don't know, a long time. He's done over 5,000 total cost analysis. So the guy is awesome. he's been an advisor for a long time. So well, let's do this. We got the why you're using Mortgage Coach. Let's talk about how are you using it in today's market? If you're watching this right now, it is September of 2020. How are you using Mortgage Coach? What are some of the tactics and strategies that it's helping you with?
I mean, we plug everything in. I guess in the current market, I'll talk about both sides. On the refi side, I mean, I think that it's really something. Here's what I love about it. I can compare 3 options. I think before I used Mortgage Coach, points always got a bad rap. Now that you show the client what points can actually do for them, I think our average last I pulled it, we have an average of 2 1/8 points per deal. People want to pay the points, especially because when they're buying down to get to the low 2s or mid to low 2s on a 30-year fixed, and it shows them that they recoup that cost and save thousands of dollars. It really helps. Another tool I really like on the refi side of things is I love adjusting the reinvestment strategy and showing them, hey, I always have that conversation that if you're comfortable with that payment that you're making now, you have 27 years on your mortgage. If we adjust that, we'll drop it to 20, 21 years, and it saves you this much more in money. So, I really enjoy, I think we're quoting everything. I know 1, 2, and 3 points on the refi, and then we're always offering to show them to adjust the reinvestment strategy, because if they're happy with that payment, that saves them thousands of dollars more in usually quite a few years. On the purchase side, I mean, I'll show you one in a second. I really like it because you get the client, and I think that right now, I do a lot of comparison of multiple down payments because, I just get off the phone with somebody and she's saying, I want to put, I can put 20% down. I said, hey, what's your target payment? Once I get that out of her, sometimes it doesn't make sense to put 20% down, and I can kind of put that side by side, explain to her that, money's cheap right now and you can invest that other 10, 15% somewhere else. And be a true, financial advisor and mortgage advisor, kind of like we talked about before. So those are kind of the 2 ways I'm using it. I love also on the purchase side showing monthly MI versus the one-time MI and different things like that. So those are I usually give 2 options each on the purchase, kind of like that, and then on the refi, the 3 options, and then offer to adjust the reinvestment strategy.
Well, cool. Well, let's get into a strategy. Let's actually start with the refi though. And what do you call it when you present it to a family? Because I always like to get scripts. What do you call the Mortgage Coach report to the family? Do you call it a total cost analysis, or do you call it something else?
No, I do. I say I'm going to get you 3 options in I call it our analyzer. It's going to come through a total cost analysis. And so if someone calls me and gives me their or says, hey, I'm thinking about refining, I say, look, we're very low pressure. This is very simple. You get me your most recent mortgage statement. I'm going to throw you 3 options and a total cost analysis. Those options are either going to clearly make sense on the numbers that come out of that, or they're clearly not going to make sense. And it's a red light, green light after we get that thing in front of you. And then if you want to call me back, if you want to give me an option that you want to go with, we'll lock it in right away. If you want to call me back, we can open up that option or those options and go through them step by step. So that's kind of how we're handling the refi right now.
Okay, cool. Well, let's pull one up and tell us the story behind it. Let's show one in a teachable way to everybody. I want to do one
Okay.
purchase, one refi. Guys, if you're watching this on the live audience on Facebook and you have a question, put it in comments for either of us. Just put the question in comments. And if you're watching the recording of this in our YouTube channel and you have takeaways, you know, something about this you liked, put that in comments. If you have questions for us, put those in comments. And we will also get you links to these total cost analysis so you can see exactly what he's doing and how he's doing it. All right.
So this is
I like your branding. By the way, before we go, I want to call out, guys. Look, he's got his company brand there, super slick and clean. He's branding his team, the Greer team, and then he's got a picture. So, you know, just make sure if I can't believe how many times I've looked at someone's report and they didn't have their personal picture or they weren't intentional about how they're branding themselves. Nice job. So rock it out.
Cool. So this is a refi for many of your past clients. You know, she called and we kind of went through some ideas. And like I said, we just did 3 different options based on her scenario. I always highlight the interest rate, payment, and monthly savings. If I do the reinvestment strategy, I always highlight the freedom point, of course. And then I just kind of let her know, like, it's going to show you the monthly payment difference. I always ask how long they're going to be in the home, you know, real quickly so that we can adjust, because you can always adjust the savings, short-term savings. Our default, we do 10 and 30 years. But I will switch that, you know, hey, we're going to be here 7 years. All right, let me switch it to 7 so that we know that it's going to make sense, because we don't want to lose money over those 7 years. Like, I would never want to do that to a client. So I kind of walk them through how everything's going to look, make sure that I understand what their goals are, you know, short-term and long-term. And then within the email that I sent to them with it, I point out that the savings over the 120 months, you know, factors in costs and all that different stuff. But the interest in 30 years is the big game changer. You know what I mean? Like, if you look at this, she's saving what, $86,000 over the 30 years by doing this refinance. So it's a huge opportunity. Even in the worst case, she's saving about $44,000. So, but this is why we're getting more and more people paying points, because if you look at the actual numbers behind the points, they make a ton of sense, right? You recoup that cost. And I think before we were using this, you know, maybe we get a person to pay a point here and there. But now that we use it, you know, it's not like we're pushing it. I get paid the same on all 3 options. But, you know, when you put the dollars and cents in front of them, it makes a ton of financial sense to pay the points.
Love it. So a couple things I wanted you to notice. He is focusing on the cost over time. So yeah, he's talking about monthly savings, but he's showing the cost over time. I want to show my screen real quick. You probably didn't see this, but I interviewed Josh Metal a week or 2 ago, and I just posted a highlight of it in our Facebook group. And so just a 6-minute highlight. If you didn't check out this video, I highly recommend that you do. Tell me what you think of this idea, Greer. Josh has 2 ways that he's reaching out to past clients: text and phone call. And when he texts and he's reaching out, he's talking about annual savings. So that's a big takeaway, guys. Notice when he was showing this to you, like, monthly savings makes a difference because every loan officer shows monthly savings. So if you want to differentiate, talk about the big value over time. You notice he uses the word restructuring debt. He calls for refis, and maybe you like this idea, he calls it a savings analysis. So it's the TCA, but he calls it the savings analysis. And then if he's calling the client, and he's saying that when I text and call clients, 90% of the time, and I say, are you interested in discussing mortgage strategies? They are absolutely, hang on. Did you lose me there for a minute? Did you lose me for a minute?
No, I got you.
Okay. All of a sudden Siri I said it. That person started talking to me, my computer. So he's doing this, and then here's the 4 questions he's asking. And Greer, I want to know if you're doing this. I think you already said it. He's always talking about how long you're going to be in the home, number 2. But are you asking the question, number 1, how are you feeling about this home? Or is the home working for you right now?
No, I'm out of these, I'm probably doing 2 and 4. I'm not doing 1 and 3, but I like those questions. You know, I'll definitely be looking into adding that. That's a great 4-question script.
Yeah, well, hey, I always like it when the person I bring in as a guest gets a takeaway or two. That's one of my goals is you're going to lead and give value and you're going to get a little value. So anyways, check it out. I just wanted to, I thought the way he's getting leads so you can have the refi conversation and then the way the questions he's doing. And when we close out, I'll share another idea. I hope you're not doing this because it will be a takeaway for you, but doing a refi versus a move up analysis. Have you ever done one of those?
I have not, no. So I'd love
No.
to see that.
Oh,
Absolutely.
what? Well, cool. Let's go into a purchase. Anything else you want to share on a refi before we do a purchase TCA?
No, just like I said, it makes it so cut and dry. It's just, it's been, we kind of crank those out, you know what I mean? And what's cool is I can typically, if I got to put them together, usually my team does, but we're short some people, I can do it. I mean, they're so easy. I do them while I'm making my phone calls, my prospecting calls, you know what I mean? And then I just stop if I get a hold of somebody and take a break. So no, I think we covered most of it, and I appreciate
Okay.
that script.
Well, for anybody who's watching this, you heard he knows how to do it himself. He's got a team. His team does it. In most cases, for big loan officers that do a lot of volume, it's not uncommon that their team will do it. Jeremy Forcier is one of the few large producers with a big team, but he loves to do the TCA himself, and he could do it pretty darn quick. How long does it take you and your team to do a TCA?
Yeah, I think we got it down and under, if we have all the info, like it's a past client and we have their old file. I mean, I think I did one yesterday in probably under 90 seconds to 2 minutes. You know what I mean? Bell to bell, while
Love
on the
that.
phone, do multitasking. I mean, it's, sometimes you got to dig a couple things up, but it's very quick with Optimal Blue and everything. So,
Love that, man.
we can hammer them out.
Cool. Well, let's see how you do a purchase TCA, and give us you
Cool.
call it a total cost analysis with purchase clients.
I do. Yeah. So,
Check it out.
and let me see. I need to, there we go.
We see it.
There we go. So this is a client. He was a past client. We bought a house here. And this is, one where he was talking about 5 versus 10% down. He qualified for both. Just kind of wanted to see the difference over the years. So we put 2 together at 5% and 2 together at 10%. We shoot a little video for him, letting him know the total cost analysis is here. And then, just kind of explaining, again, the savings over 120 months EMI paid. And he ended up doing one of the, I think he ended up doing this option here, option 2, which if you look at it isn't a bad option, when he's saving that much down, because he wanted to do some other things with the cash. So on the purchases, I'm more likely to shoot the video and just say, hey, congratulations on getting under contract. Really appreciate it. Here's your total cost analysis. We got 4 options put together for you. If you need more information, you can click the more info, but give me a call and we'll go over these and see which one you want to get locked in. So I always highlight the interest rate, payment, cash to close, and then just kind of let them dig in on it. So that's kind of how I'm using that is trying to get 4 distinct options, like, one-time MI, monthly MI, or 5 versus 10% or 10 versus 20%, just different things like that. So, that's how we've structured how we're doing our purchase business on here.
Now, I got the feeling you weren't vested in which option he picked. You just, hey, here's some options. He picked one. I've always heard that when the client picks it, they own it and they're more committed. Do you feel like since you've used Mortgage Coach that your conversion has gone up and the clients are more committed to the decisions they make?
Yeah, exactly. They do own it, number one, and I do feel like our conversion's gone way up. I feel like the shopping's gone way down. You're always going to get that client that just wants to nickel and dime everything. I mean, that's just inevitable. But I mean, I think that the fact that we put this in front of people, they can look at all the numbers. You're giving 3 options. So if they're driving in their car and they hear a 2.75% on the radio that someone has, you're putting that 2.75% in front of them, but you're also giving them other options to make sure that that 2.75% is the one that makes the most sense for them. You know what I mean? And I think that's part of what helps the conversion go up, is that you're presenting options and then they do get a select. You know what I mean? You're not just saying, okay, your rate's going to be this. You're giving them a few options so they get to choose and then they do own it. So I think it's really crushed it as far as the conversion is going. Our purchases were always been referred very well, so we always had a pretty good conversion there. But the refis, I mean, especially, but even on the purchases, it's just a situation where I think people like options and they like that control. And if you give that to them, it really helps you and helps them. And like you said, there's no looking back after you select option 3 here.
Yeah, well, again, you are letting them shop. They're shopping with you, and they're getting options. Where when you're
Yep.
only giving them a fee worksheet, they're going to get options, and so that is part of the science of selling, guys. So if you're a new loan officer on this, it is important that you're showing options. It's important that you're showing the cost over time for a couple of reasons. One, it's more valuable to a consumer. Like, you can make a better decision when you have options and you compare those over time. It's just common sense that that's a better way to shop. But guys, you know what else? It's more transparency. So people are like trusting you. Other lenders, fee worksheet, they don't have the transparency of the cost over time. They don't have the transparency of the cost over time with options. And then strategies. So let me show you another strategy. Tell me what you think of this, if you've ever seen anything like this. I don't know if you saw my interview with Amber Kovarik. Are you familiar with Amber? You know who she is?
I don't actually.
So she's a guild loan officer in
Okay.
Chandler, Arizona. I think she's in the core, 45 units last month. So she's doing a lot of production. But the big takeaway when I asked Amber, how are you using Mortgage Coach a lot right now? Well, she said, in my market, I'm asking everybody that I do refis with, how are you still liking the home? And she says about 20 to 25% are like, they want to talk about that. And so she was doing a refi with them. You could tell, great branding, got her picture on it. But here's the deal. She showed them a refi option that would save them $322 a month. So they were like, great. But then she said, to move up, they wanted an extra bedroom, they wanted a different school district, it'd be $525. They qualified for 5% down, and that would have raised their payment by $507. So that was clarity. Like, this would be your increase in cost to have that next home. She said, or you could buy that home, non-contingent, because you qualify, sell it, and then recast the mortgage. They had $120,000 in equity, and they could recast it, and their payment would have actually gone down. And what the client decided to do was option number 3, because they said, you know what, we got a financial planner, we're getting about 8% on our money. Why don't we put it at 6? So they said, hey, let's get a little more liquid. And look at this, guys. Here's netting out the move up analysis. The client went from, I can lower my monthly payment by $300 a month, having a pretty negligible impact on net worth, to getting their dream home. So check it out, extra bedroom, school district they wanted. They got an extra $125,000 liquid, interest bearing, and 15 years when you looked at it on the TCA based off their assumptions on appreciation rates, almost $400,000 in net worth. And then here's the value, guys. Agent gets a listing, agent gets a move up buyer. What are your thoughts on that one, man? You like that?
No, I love it. I'm gonna add that right away to my anniversary calls. I mean, the agents will love you start doing that for them. I've not done it that way, but that's killer right there. That's next level.
Yeah. Well, and just even be able to have, one of the things I'm advising is have a couple stories like that you tell your agents you're doing, because let's face it, agents are celebrating low interest rates. They're not celebrating refis. That's just taking their loan officers away from servicing them. Now, they're probably getting less cold calls and having less loan officers chasing them. But at the end of the day, they don't love refis. But now here's a way to say, hey, realtors, look what I'm doing with my refis to create value for you. And then if you just got a couple move up buyers a month or every 2 months for one of your agents, I mean, just more loyalty, more business, and a great value prop when you're recruiting agents. So,
absolutely.
So anything else you're doing that you think would be valuable to share with the Mortgage Coach community, or like, what's your favorite feature in the Mortgage Coach?
I mean, the total cost analysis and just the fact that we can compare all these different options. I can't think of anything off my head that I would want to share other than, if you're watching this and you're on the fence, it's one of those things like, I got LASIK in, I think, like 2010 or something. And I was like, why didn't I do this 10 years ago? You know what I mean? Like, you know, like, why was I waiting? And mortgage coach always felt like that. That's what I tell people, you know, that I'm coaching internally in different things. Like, I guess the only thing I would say is if you're watching and you're still on the fence or you're thinking about it, like, it's been a game changer for our business. I don't think we'd be smashing records and getting everything out at the rate we are without it. And then the people that I've talked into getting it within our company have told me that I got an email from Mark Smith in our company the other day, just saying, hey man, I really want to thank you for nudging me and getting me to go on this. I don't know how I was doing it before. So I guess the biggest thing is if you're not using it and you're thinking about using it and you're watching the video, like pull the trigger. It's the number one tool we use. Like I advise it to everybody I coach and every new loan officer. Like my junior LO, I made it mandatory that he signed up with the company and get it going. Because I just don't think, I think it's a primitive way to do business without it. I think it does take you to the next level as a professional. And then all the tips and tricks you're sharing, you know, those things are just things you can keep adding to just making yourself look better and better and better.
Grover, love that. You said it much better than I could have. And I liked your term. It's a primitive way of doing it without mortgage coach. I like that. I'm going to use that again.
Yeah.
So I see Elway in the back. So I hope we're rooting for the Broncos this Monday.
Absolutely, man. Go Broncos. I'm just hoping everything holds up. We've had some injuries this week, but we're always optimistic right before the season starts.
Right on, man. Well, hey, I appreciate you taking a leadership role in the mortgage coach community. I'm looking forward to interviewing you again when we roll out to your entire company. And I would love to interview you for the Mortgage Coach channel again if you're game. Anytime you have ideas, reach out to me. And when you have a big success story and you want to share it with the Mortgage Coach community, this is one of the things I do to add value. Try to do interviews like this every single week.
Right on, man. It's been a pleasure. And I got a couple great nuggets and I appreciate you as well. So talk to you soon.
All right, guys. Well, don't hang up. Even after I say goodbye, I want to debrief on a few things. But guys, if you got value from this, give it a like, share it with your mortgage friends. Mortgage Coach will help you not only deliver more value, which should just be enough by itself. I want to give my families better value, more service, but it will save you time. And if that wasn't enough, you will get a higher level of conversion rates and less rate shopping. So join the Mortgage Coach team. Thanks a lot, Grover.
Yeah, man.